Of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Broker Studio, streaming on YouTube. It is Wednesday, June 9th, 2021. I'm Carol Masser along with Tim Stenovic, host of Bloomberg Quick Take. Stocks off highs.
Yeah,
not doing much.
Not doing much. It looks like, look, I think investors are on inflation watch.
Yeah, that's what I think. I agree with you. We did have a Treasury auction. Man, we've seen some big moves on the 10-year, 30-year also to a low. So we're going to talk about that a little bit later on. We're also going to talk about kind of the new batch of meme stocks because it feels like Wendy's is out, Clover Health is out, and there's a new group in.
Every day, it's a new day. It's a new meme stock. That's what it certainly feels like.
It also feels like I think I kind of hear some parrot heads in Times Square.
Oh, do you? Is it 5 o'clock somewhere?
Do I? Yes, it is.
The cover this week for Bloomberg Business Week, just a fascinating deep dive into Margaritaville Enterprises, Jimmy Buffett's empire.
The other Buffett, if
That's
you will.
right.
All right, we're going to get things going, though, for you on this Wednesday with a check on that trading day. Here is Charlie Pellet. It's 5 o'clock somewhere, Charlie.
Indeed, and who doesn't love Jimmy Buffett? Well, here's what's going on. We have got stocks trading mixed right now with the Dow Jones Industrial Average down 48 right now, a drop of 0.1%. S&P, NASDAQ, they are both higher. S&P up 4 right now, a gain of 0.1%. At 42.31, 42.32 by the record with a decimal in there. That would be the record on the S&P. We did trade above that earlier in the session. NASDAQ right now up 38, a gain there of 0.3%. NASDAQ 100 index up by 0.4%. Meme stock mania. Today we have got AMC on the minus side, down 11.2%. GameStop, which reports after the closing bell today, up 2.5%. Wendy's dropping today by 13%. Gold down 0.1%, 18.91 the ounce. West Texas Intermediate crude down 0.5%, 69.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
Let's set the market drivers report. And let's get to the Business Week agenda. Dave Wilson in the house, stocks editor at Bloomberg News in our Interactive Broker studio. Is this a meh kind of day?
Oh, yeah.
Oh, yeah.
You want to know how I can tell?
Why?
Because I'm looking at the S&P 500, the intraday range from high to low. Now, we've seen a lot of days lately where there hasn't been much movement in the S&P 500. Today, there's even less. You're looking at, from high to low, a move of 0.25 percentage point. That's all.
Yeah.
And we're sort of smack dab in the middle of the range at the moment. So, it just goes to show you there is some anticipation of what's to come. And certainly the consumer price report is front and center as far as that goes.
But people are buying certain names and they're selling certain names today.
There's no question. I mean, that's always the case. You look at what's doing relatively well in the S&P 500. And, you see some of the drug stocks. That's an area that's actually at the forefront of the gains among the 11 main industry groups in the S&P 500. We're talking about the likes of Bristol Myers Squibb and Regeneron and Biogen and Eli Lilly and Merck, which, by the way, got a $1.2 billion contract from the U.S. government for a COVID-19 drug. So that's a piece of it. The other piece is, some disappointments in terms of earnings out of the food maker Campbell Soup and the, shall we say, distilled spirits maker Brown-Forman. And on top of that, United Parcel Service, UPS, they came out with 3-year forecasts. People didn't like what they had to say in terms of their profitability estimate for the U.S. specifically. UPS down a bit as well, almost 5%.
Dave, how does the story change tomorrow based on what we see with the CPI report?
Well, what's interesting is that, you've seen bond yields come down lately. So you look at what's up today, you see the interest rate sensitive areas of the market, utilities and real estate. And on the other hand, worst performer on the day, financial stocks. And we have kind of seen that happen lately. So, when you think about the relationship between inflation and interest rates, the CPI report could certainly turn that equation on its head, depending on how it comes out.
Yeah, I mean, I do wonder about the impact. As you said, we're watching the interest rate sensitive. And I do... You know, we're going to talk about wage growth a little bit later on here. You know, it gets back to how many data points do we have to wait before we understand whether or not this is transitory or permanent in terms of the inflation fears? And we talk about you raise wages, they're there to stay, but at some point, does it spread out to other industries? And I think that's the bigger question.
Well, that's the question I have for you, Dave. We learned yesterday that Chipotle is raising its menu prices by 4% in order to pay its workers more, attract and retain talent, and also rising food costs. That's a permanent change. Well, menu prices don't go down.
To the extent that, you know, you're focusing in on the labor part of the equation as opposed to the food part, because we know those prices can fluctuate.
Right.
It's why the government, you know, has such a thing as a core inflation rate, which takes food and energy out of the equation. Now, that said, I mean, it's going to be an issue for companies down the line. And it's not just wages that's an issue for a lot of them. It's transportation costs, for example. So it's a matter of how they can compensate. If you're a Chipotle, you have room to raise prices, and it's not like you're going to send people out of your restaurants. Other industries, you may not have that kind of flexibility, and that's where things get interesting.
Chipotle, by the way, just down a hair, down about 1/3% here. Any other stocks that jumping out at you today?
Well, I mean, like I said, a few here and a few there. I should point out FedEx is down along with UPS. Maybe not a surprise. I mean, given the competition between those companies. You know, Dish Network got a rating cut over at J.P. Morgan to the equivalent of sell from neutral, and the satellite television service is the worst performer right now in the S&P 500. Kind of going back and forth with Brown-Forman. Both those stocks down about 6%.
All right, good stuff. Dave Wilson, thank you so much. Dave's going to be back a little bit later on with his stock of the day. Let's do the chart of the day.
Let's do the chart. Well, should we do the chart of the day?
I meant the bite of the day.
The Bloomberg Business Week
See,
bite
I
of the
hear
day.
Dave Wilson,
I know.
And it's like I'm a Pavlovian dog. I just go to chart of the day.
We're too excited for the chart of the day, but that does come up a little bit after 3:30 p.m. Wall Street time. But it is the Bloomberg Business Week bite of the day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
So today's number, Tim, it is 20. 20% of Europeans recently surveyed see the U.S. as an ally out of necessity rather than a partner with common interests and beliefs. The European Council on Foreign Relations survey shows only 1 in 5 Europeans view the U.S. as sharing the region's values. At least half of those questioned think the American system is damaged. The poll also showed little faith in the EU, with the bloc described as broken, which is kind of interesting, especially as the president's getting ready to meet with a lot of European leaders.
Yeah, it's his first overseas trip, the G7 happening this week, and he's on his way there right now. The big question is, well, there are a lot of big questions, I think, Carol, but how does he change the way that the U.S. is viewed, especially how it has been viewed over the last 4 years? And there's the part about going back and forth between leaders, right?
Well, that's the other thing. You know, do we have a certain, way of managing and leading for 4 years? Then do we get somebody else in a few years, and the European leaders have to kind of start all over again? And I can understand why they might be a little cautious. Can we talk about the rest of the show?
It's a good one.
We've got the newest meme stocks in town. You know, if you think it was Wendy's or Clover Health, you're too late.
That was so yesterday, Carol, okay? Katie Greifeld's going to join us, and she made this analogy that it's like being in high school, right? You're cool one day, you're not cool the next day. That's what's happening with meme stocks. Speaking of that, GameStop, the original meme stock, the OG, reporting earnings after the closing bell today. But is it even going to matter?
I don't think so.
I don't think so
What's
either.
it up 1,400, 1,500%?
Yeah.
It is crazy. The Bloomberg Big Take today, how the retreat of Exxon and the oil majors doesn't mean an end to fossil fuel and the emissions, unfortunately, that come with it. This is about NOCs, and if you don't know what I'm talking about, then you just got to stick around.
Yeah, state-owned oil companies versus the super majors, and there's a little bit of a land grab going on right now. Also, consider yourself warned, parrot heads. Jimmy Buffett is coming to Times Square.
Yep, it's this week's domestic cover story of Bloomberg Business Magazine. Margaritaville opens in the Big Apple, and it's a resort, it's a restaurant, it's a lot of stuff.
Well, speaking of the Big Apple, one of the most read stories is about the New York tax bills that show COVID's lasting damage to real estate. We're going to dive into that a little later.
And then there's a new ETF. It's called the Wisdom Tree BioRevolution Fund, really tapping into the biotech innovation bandwagon. I've heard this before.
Yeah, it reminds me of Kathy Wood in ARC.
Where? Oh, that's right. She's been doing it for 7 years. So we'll see what Jamie Metzel, who's involved with this, certainly a friend of the show, we'll find out what they're up to.
In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden is on his first overseas trip since taking office. He's due to land in the UK this afternoon, where his first order of business will be delivering remarks to U.S. troops. Over 8 days, Biden will be taking part in both the G7 and NATO summits, along with the U.S.-EU summit, and he'll be meeting with Russian President Vladimir Putin. Before leaving the U.S., Biden talked about his goals for this trip.
Strengthening the alliance, make it clear to Putin and to China that Europe and the United States are tight.
Biden did say he'll bring up recent cyber attacks when he meets with Putin. We're also learning the Biden administration apparently plans to buy 500 million doses of Pfizer's COVID-19 vaccine to donate to the world. The Washington Post is reporting President Biden will make the announcement at the G7 summit this week. Well, Biden leaves the country without a deal on infrastructure. Yesterday, he broke off negotiations with Republican Senator Shelley Moore Capito. She says they could never agree on how to pay for it.
I think in the end, they decided that the pay-fors that they brought to me the final time were many taxes. We had told them before we could do this without raising taxes.
Biden initially wanted a hike in corporate tax rates, but agreed to a 15% minimum corporate rate. Republicans had proposed using unspent COVID relief funds. A bipartisan group of House members is now looking at a plan that would spend $1.2 trillion on infrastructure over 8 years. No word, though, on how it would be funded. Aides say President Biden still is hoping for a bipartisan agreement. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So a favorite moment of mine every week is Thursday afternoon. It usually happens right after our show, and the Bloomberg...
You're going there?
The Bloomberg News quiz comes out.
Yeah, because you are so competitive.
Oh, come on.
And the thing is, the earlier you do it, the more likely you are to at least get a top 10 spot because fewer people have done it, I've learned. So that's when you want to, bask in the glory of the news quiz.
We are so convinced that this question is going to be on the Bloomberg News quiz this week. Which is the first country in the world to formally adopt Bitcoin as legal tender?
If you guessed El Salvador, then you are correct. It's become the first country to formally adopt it, and the president said that the Congress approved his landmark proposal. He's 39 years old. He's changed his Twitter profile to Laser Eyes for the uninitiated. That means that it's someone who really believes in cryptocurrency. You haven't changed yours yet.
No, I haven't. I have no plans to. Are you changing yours?
No.
No, okay. Anyway, the high-stakes plan to ramp up usage of the volatile currency adds to the bull case just as the token struggles to recover from last month's dramatic rout. Listen, we talked to Mike McClone, who was down in Miami, a big Bitcoin conference, but he said, behind the stage, everybody was talking about the whole crypto world, and it's many more currencies than Bitcoin, and it sounds like it's moved from not being a peak and the undoing of it, but rather more about legitimacy.
Yeah, right now, price of Bitcoin is higher by about $2,800, trading around $36,500. In other news, the fall has some chart watchers, some strategists for Bitcoin eyeing a possible drop, Carol, to $20,000.
Exactly. There's got to be, kind of watching the trend lines here. So further weakness, as you said, may bring the $20,000 zone into view as a downside target. That's according to Oanda Corp, Evercore ISI, Tolbacken Capital Advisors. Bitcoin has dropped about 7% this week, was trading, as you said, at around 34,000. So, listen, we have seen incredible volatility, and it felt like just yesterday it was up at 65,000.
Yeah, it's dropped about $30,000 from its April record. It was roiled by that tweet from Elon Musk over the energy it requires, as well as a renewed regulatory crackdown in China. Also, U.S. authorities increasingly thinking about how they can get their hands on it.
Exactly. So, regulatory certainly ramping up their efforts. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Continuing to trade little changed and near a record. Bonds are rallying as investors brace for a key inflation report, CPI, that could provide clues about the direction of monetary policy. Complete coverage as that number breaks tomorrow morning, 8:30 a.m. Wall Street time. We've got the S&P up 2 points right now. 42.30, 42.32 would be the record, up by just about 1/10 of 1%. The Dow down 56, a drop right now of 0.2 of 1%. NASDAQ up 36, up 0.3. 10-year yield 1.48%. 10-year up 13.30 seconds. Gold down 1/10 of 1%. 18.91 the ounce. And West Texas Intermediate crude down 1/10 of 1%. 69.97 for a barrel of WTI. Among the names reporting after the closing bell, Chewy. Chewy shares lower now by 1.1%. Dave & Buster's, ticker symbol PLAY, up now by 1.4%. I'm Charlie Pellecat. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that update. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Well, we caught up with our next guest on the first trading day of this year. Tim, it was back in January, and we talked about how things were going, how the pandemic has changed and shifted the world of technology and IT demand. So it's great to get his perspective again.
Yeah, Ram Nagapan is Chief Information Officer at BNY Mellon's Pershing. He joins us on the phone from New Jersey. Ram, how you doing?
Doing good, doing good. Happy to be here with you during the week of Insight, the BNY Mellon Pershing Advisor Conference.
Yeah, we are excited to have you back. Take us through how things have shifted over the last 5 months as we have started this move, many of us and many of your clients, back to the office.
Yeah, meaning we do see everybody moving into the hybrid. And from a technology point of view, I want to say we did have technology that helps us work on remote, but I want to say there's going to be a lot of innovation and changes that's going to happen in this space, because whatever the tools we have has helped us, but it is not the best. So the remote work or working in a different places is going to exist, and a newer technology and a new way of how we collaborate is going to happen. We see more and more digital capability is going to be rolled out, and the experience that our clients are going to face while they work, wherever they work, however they work, it's going to be very different, and it's going to be all digital, and more innovation is going to happen. And that's what I see in this, I would say the hybrid work environment that's going to go into. So we're all excited to come back to work, actually, and it's slowly progressing, I would say. We take it day by day as things are getting back to our original, and hope we all expect it to come back to the original as soon as possible.
Well, I can't wait to be with you guys with Insight in person because it's such a great check. I always feel like for me and for our Bloomberg audience to get an idea of what's on the mind of investment advisors, what they're hearing from clients, what are the themes and trends that we need to be aware of. And you really kind of put it together in terms of the technology world. You say more digital, more innovation in space to come, Ram. So what does that mean more specifically?
Yeah, so more specifically, what I would say is people are applying technology to either be efficient or to deliver the right experience and for the growth. But here is what I wanted to say, meaning people are looking at it in an incremental fashion. That's good. There's nothing wrong in applying technology to make it better in an incremental way. But what I would advise or make all the innovators think is to be completely reinvent what you do using this opportunity. Reinvent, either it could be a business model or it could be the way in which we deliver products and tools. So meaning even in the Insight, we're talking about how the advisory is changing from selling products and using tools to almost like perfecting your practice and focusing on your client. So it's all about reinventing your business, applying the technology. So it's more like technology driving, and technology is enabling you to do these kind of things.
What about when it comes to new innovations like cryptocurrency? Carol and I were talking about Bitcoin and El Salvador becoming the first country to actually make Bitcoin legal tender. Bitcoin right now trading at about $36,000. How has technology changed that just during the pandemic?
Yeah, so talking about crypto, the underlying blockchain, it's used for the digital currency as well as other. So the technology of blockchain is there to exist. Now, talking about crypto per se, it is volatile, and there's a lot of regulatory oversight on it. So we at BNY Mellon, actually announced that we are going to be supporting the crypto pretty much the entire life cycle for our clients to come and consume, either from creation of the asset all the way to custodying and other type of things on top of the crypto. So my view on this is the technology is pretty solid, not only in the space of the cryptocurrencies, but also into a smart contract and other type of blockchain applications. That's here to stay. Even the cryptocurrency is here to stay. It's just that we need to be conscious about where it gets applied, how it gets applied based on the volatility and other things. People need to select, learn. I think the first thing is about the advisory community. It's all about learning the new asset classes. And we will provide all the capabilities, but you need to match exactly where to use crypto with your clients, and all of those is going to happen. So it's an evolving space, but I wanted to say it's a space, it's an asset class that is here to stay.
Ram, what was the moment that you realized that it was here to stay and you needed to make these changes from a technological perspective to offer this to clients?
See, my thing is when you see the price fluctuates and institutions getting in, see, it started, a long time back, it actually started as a retail, the initial coin offering. But then when the institutions get inside, then it's for the real. It's for the real. It's for the time it's here to stay, because everyone, big and small, they're all looking at the asset classes. The regulation is looking at it. So they're trying to, when the regulations are all looking at it, it is an asset class that's here to stay, because they're all going to make it, I would say safe and sound and correct, and for that asset class to stay. And then it's for real. It's for here to stay.
All right, going to leave it there. Ram, so good to hear your voice. Be well, and look forward to talking with you again. Ram Nagapan, his Chief Information Officer at BNY Mellon's Pershing, on the phone from New Jersey. And interesting to hear him describe it as an asset class.
I know, and especially the way that they're involved in the process, from blockchain creation, from the creation of the asset on the blockchain, and the way they're thinking about the blockchain.
Mike McClone saying we're all going to have a piece of it in our portfolio at some point. I know.
Who knows?
Time will tell. All right, stick around, folks. Lots more to come right here on Bloomberg Business Week. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Wendy's and Clover Health. So yesterday.
It's all about private prisons and energy.
Yeah, exactly. We're going to get into the latest batch of...
Did I give away too much?
New meme stocks. You kind of gave it away at all.
I'm sorry. Okay. Well,
yeah, thanks very much.
Okay. Stay tuned.
We're going to get more on that in just a moment. First up, though, let's get back to the day's trading picture and a look at some of your top stories. Hey, Charlie Pellet.
Hello there. We've got Clover down now by 14%. Wendy's down 12%. AMC Entertainment tumbling 10%. GameStop reports after the bell. Shares of GameStop up now by 3.5%. Stocks trading near records. We have got the Dow lower, though. S&P right now at a record 4232, tying the record up 5, a gain of 0.1%. NASDAQ up 38, up 0.3%. NASDAQ 100 index up 0.4%. Russell 2000 retreating by 0.3%. The Dow down 33, down 1/10. 10-year yield 1.48%. Gold lower, a little change, down 0.1%, 18.91 the ounce. West Texas Intermediate crude just below $70 a barrel, 69.84 right now, down by about 0.3%. The European Parliament has approved vaccine passports, a key step toward easing travel across the European Union as the summer vacation season nears. They should be operating across all 27 EU member states by July 1st. Now, what about a timetable for a return to normalcy around the world? Dr. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
Kudos to the world leaders and initiatives such as COVAX. Vaccines are on the way in India. We've already seen that in the United States, where the uptake of vaccines has led to some sense of normalcy in our lives. Children are back in school, for example. In India, I think that will follow, although I think there'll be a disastrous residue of the COVID-19 pandemic on the country as we predict over 1.5 million deaths by the end of the summer.
Dr. Bhakti Hansadi with Johns Hopkins. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track. Pfizer shares up 2.5%. BioNTech, its German partner, the ADRs up now by 8%. AstraZeneca's ADRs up 2.1%. Moderna up 2%. J&J Johnson & Johnson up now by 1.3%. Recapping stocks mix, S&P up 4, up 0.1%. I'm Charlie Pellet. This is a Bloomberg Business Live.
Check it out. Another batch of names have been added to the meme stock frenzy as retail traders latched on to their latest favorites today. So yes, we've had GameStop, AMC, Hertz, so last year. And yesterday we talked about Clover Health and Wendy's. Today, Tim, we got some new names.
We do. Katie Greifeld from Bloomberg News is here to tell us all about it. She's cross-asset reporter and joins us in the Bloomberg Interactive Broker Studio. She's also my anchor for Bloomberg Quick Take Stock. It happens each and every day at noon.
How
Wall
much
Street
did
time.
you guys talk about meme stocks today?
Today,
30
yesterday,
straight minutes, it feels
probably
like.
tomorrow. It's what there is. It's what is happening. And the big question I have, Katie, is what makes a stock a meme stock?
That is what I'm trying to figure out. Because, I mean, if you look at the names that are moving today, you have GEO, for example. That's a prison operator. You have Clean Energy Fuels. That operates natural gas filling stations. It feels a little bit random. I mean, at least GEO, if you look at the short interest.
Oh, and is it GEO, not GEO?
No, it's GEO. And
Just checking.
The short interest is pretty high. It's at 35%. So that's a potential short squeeze target, but it's not as clear on Clean Energy Fuels. It just feels very much...
It's not as high. I saw it on that one. It's not as
yeah.
high. And Wendy's yesterday wasn't that high.
No, Wendy's is interesting because it fits into this broader trend of very nostalgic names, like very early 2000s names like GameStop, AMC, BlackBerry, Express. Those are all names that, I don't know, at least to me, they evoke a specific place in time. And that you have seen a little bit of that, but in these names that we're moving today, I don't think anyone has any warm, fuzzy feelings attached to GEO, for example, that prison operator.
Yeah, I think that's fair to say.
Yeah. Well, but you know, we were talking earlier before we got started, a conversation we were having with Jill Weber, editor of Bloomberg Businessweek magazine, because we have to think about how do we cover this, because often there's a fair amount of volume in these names, right? And so when you look at the markets overall, but I do feel like when you look at market caps and things, there's such a small sliver of our financial and market universe.
Exactly. It almost feels like Russian roulette, where suddenly one day you're going to wake up and there's just going to be crazy volumes in names that really haven't seen anything like it. And it's interesting to me. I mean, it's interesting to try to track this ball of money around the markets, but it's also interesting to see professional investors try to adapt to it. Because, I mean, what do you do? And there's actually a great article on the terminal right now from my colleague Lou Wang, who spoke to Chris Harvey from Wells Fargo, who said that his hedge fund clients, they don't want to short any specific names. They're afraid of getting squeezed. So they're moving into shorting ETFs and really large companies, because you don't want to end up in this situation if you have a lot of money on the line.
Well, I wonder about the chatter that's happening in places like Wall Street Bets right now, and it's a place that you spend a lot of time. And look, it's for work.
You love saying that.
I do, because that's where you're lurking on most days. And I do wonder what they're saying about these companies today, and also if it's possible for some hedge fund to come in and, you know, front run essentially the conversation in there and say, wait a second, we're going to get in early on this because we know that when people talk about this in this forum, there's increased activity.
I mean, you have heard a few investors or hedge funds come out and say that, you know, we are basically doing that. And if you do scroll through these pages, I mean, you can kind of get a sense if people are trying to like put together blueprints, trying to identify potential short squeeze targets. So there is a sense that, I mean, this can't all be retail. At a certain point, you probably see some more institutional, some professional names come in and try to capitalize on that.
What's interesting is clean energy fuels is up 6 out of the past 7 trading sessions for a gain of nearly 48%. It's up like 45, 46%. I mean, these are names, if you look at GEO Group, it's up 8 of the past 9 trading days for a gain of 82%. So, I mean, it's happening over a week's period of time, and I do wonder, when does it hit your radar or our radar that we put it in a story on the Bloomberg?
I think that's a great point. And that was something I was thinking about with Clover Health earlier today. It's not doing so well today, but had an amazing day yesterday. And you saw options volume just spike yesterday. But if you look into April, for example, or even last week, a few weeks leading up to yesterday, it was something you saw building. So it feels like it's not like turning on a light switch. It is something that builds, but it just feels like it explodes onto the radar on one specific day, and when you get double-digit moves.
Right, and I do wonder, like, is there some formula or algorithm that people are trying to figure out that how do you track, do all of these meme stocks go up for about 8 days? You know what I mean? Like, I do wonder, like, how do we kind of find what the next one is? Because I know Bloomberg Intelligence has been looking at this stuff.
Yeah, absolutely. And that's something that, I mean, my colleagues and I are trying to determine, is there some pattern here? But then you have companies like AMC and GameStop that just are constantly in the conversation, that started the conversation, still in it.
Well, you've got lots of work to do.
Katie Greifeld from Bloomberg News, cross-asset reporter, also Bloomberg Quick Take co-anchor. In the meantime, let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Lawmakers are hearing from college administrators, coaches, and commentators on the issue of whether college athletes should be compensated for the use of their name, image, or likeness, also referred to as NIL. NCAA President Mark Emmert says several states are ready to impose their own laws, and that's leading to confusion.
We are urging Congress to pass legislation creating a single national NIL standard.
Emmert says any bill needs to also support Title IX protections. 18 states have passed their own laws to govern NIL, 5 of which take effect July 1st. Millions of dollars are reportedly stashed away in bank accounts held by federal prisoners. Bloomberg's Nathan Hager reports.
It's a banking system run by the Federal Bureau of Prisons, which houses about 129,000 inmates across the country. According to court documents and interviews obtained by the Washington Post, more than 20 inmates have accounts holding more than $100,000 each for a total of more than $3 million, shielded from court orders like child support, alimony, and other debts. One source says the combined value of all federal inmate accounts recently topped $100 million. Critics say the system is rife for corruption. Bureau of Prisons leaders say they are diligent in making sure inmates pay their debts. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, President Biden is revoking bans on the Chinese-owned apps TikTok and WeChat that were put in place by the Trump administration. Senior administration officials say they plan to review software applications from foreign adversaries to make sure they do not pose a risk to American data. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massler along with Tim Stenovic. This story jumping out at us from our Kartikeya Mehrotra, who was so incredible yesterday when we talk about what's going on in the cybersecurity and hacking space. This story is about Alla Witt, I believe her name is. Her plans for a new career as a computer programmer included helping clients make enough money to see the world. This is according to YouTube videos and social media posts. She was in her late 40s, Tim, with a degree in applied mathematics and an itch to do computer programming.
Yeah, there was a darker side, though, to Witt's interest in computers. According to federal prosecutors, in the 6 years leading to October 2018, Witt, a Latvian citizen who grew up in Russia, allegedly transformed from amateur developer into a key cog in a cybercrime syndicate known as TrickBot.
Love this story. She's now 55. She's assumed the identity Max, started writing illicit code according to a federal indictment that was unsealed on February 8th after she was detained in Miami. She's since been transferred to Cleveland, where she's one of 7 alleged members of the TrickBot gang facing charges for their role in a global fraud, data theft, and ransomware operation with roots in Russia, Ukraine, and Belarus.
Witt is the first alleged member, though, of the TrickBot cyber gang to be detained in the U.S. She appeared before a U.S. magistrate judge on June 4th for her arraignment, where she waived her rights to a detention hearing. She hasn't yet made any pleadings in the case.
What's interesting about this story, and I think what caught our attention, is that hackers tend to be relatively young men, according to Kartikeya's reporting. And so it's kind of interesting. It says at first brush, her public persona didn't offer any hints at her alleged interest in cybercrime. Her friend sent her digital postcards of cats celebrating Christmas and requests to play games together, according to her account on the Russian social media site VK.
Look, you got to read this story. It's at Bloomberg.com. It's available on the terminal. It is just a fantastic profile of this person. And it comes at a time when ransomware is increased attention by the U.S. government, given that it has affected our critical infrastructure very significantly in the last few months.
And just profiling often works, but profiling isn't always a guarantee in terms of who's doing what, especially when it comes to, it looks like, cyber crimes. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks trading close to a record right now. Emphasis on close with the S&P at 42.29. 42.32 with the decimal would be the record there. We've got the S&P up now by less than 0.1%. The Dow, though, moving lower, down 56 points, a drop of about 0.2%. Nasdaq's up 27, a gain of 0.2%. 10-year up 13.30 seconds. 10-year yield 1.48%. We've got gold down 0.1% right now, 18.91 the ounce. Texas Intermediate crude down 0.4%, 69.77 for a barrel of WTI. Earnings after the bell today will include GameStop up right now by 5.4%. Some of the other names reporting after the bell. Chewy, the pet food retailer, down 1.1%. Dave & Buster's, ticker PLAY, Play, up now by 1.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, I can't sing this, but you know Margaritaville. It's definitely a hit song.
You can sing it. Feel free.
I could. It's a chill state of mind. It's a multi-billion-dollar marketing empire. And, Tim, it is the newest attraction in Times Square.
It is. It's also the cover story for the new issue of Bloomberg Businessweek magazine. It's available on newsstands and at Bloomberg.com/Businessweek. Joining us now is Joel Weber, editor of Bloomberg Businessweek. He joins us right here in the Bloomberg Interactive Broker studio. And Austin Carr, technology reporter for Bloomberg News, joining us on the phone from L.A. Joel, I learned so much. I always learn when I read stories in Bloomberg Business. I had no idea that Margaritaville's empire was this big.
That's the best thing about this story is that Jimmy Buffett from his music. It's near and dear to me, being the parrot head that I am. And the fact that he was able to turn one song into basically something that's even bigger than his music success, the scale of this empire is amazing. And it is I'll call it a modest news hook, but they are in the process of opening Margaritaville in Times Square, right off Times Square on 40th Street. And it feels just like the perfect time to take over Manhattan with Margaritaville, right? As the city reopens and, we're all vaccinated and get to go celebrate with, way too many margaritas, I'm sure. So Austin, rewind the clock a little bit. Tell us about how you got the story.
I actually started reporting this story because I had come across their frozen concoction maker, which I would highly recommend. I think we describe it in the story as the iPhone of adult beverage makers, and it very much is that. I mean, it's really a beautiful piece of machinery, and I just realized, oh my God, like if this company Margaritaville, which I also had those associations to the song or to, a tequila hangover, but not to this sort of hardware maker or hotel empire. And so I just started getting interested in diving deeper into the research, and that's where the story started. And we realized there was so much more when we started talking with Margaritaville, their executives in Florida, and just realizing they were not only opening this $370 million property in Times Square, but right now we're in the process of developing 25 or 26 or more properties around the globe, from retirement villages to boutique hotels to resorts to RV parks, water parks, you name it. They're sort of really involved in so many different entities that just sort of boggles the mind.
How did it all get started, Austin?
So it actually rewinds, it goes back to the late 1990s. Margaritaville's CEO is a guy named John Colin, and he was moving down to Palm Beach and met Jimmy Buffett through mutual friends. And he had been in private equity before, just working at a company that owned Long John Silver's and later bought Snapple and was involved in consumer branding. And when added Jimmy Buffett, he just realized this is the biggest brand there is. These parrot heads sort of, just really enjoying themselves at this concert, moving in unison, could sort of sort of, win over more consumers than, Long John Silver's ever could. And they started exploring, John Cullen and Jimmy, whether or not they could build this into a larger empire. And the first thing that they opened was a big, massive restaurant in Orlando near Universal Studios theme park, which was sort of an ode to Jimmy Buffett and what he stood for in terms of Margaritavilles, music, sort of the general salt shaker vibe that he has. And they built it from there throughout the 2000s, turning it into more restaurants, a beer brand with Anheuser-Busch, and a lot of consumer goods, including that daiquiri maker I mentioned, which retails for up to $500.
You sound like that one a lot.
Wait, I have to ask. You spent $500 on a daiquiri maker?
I got the Bali version, which only retails for $300.
Okay,
So
yeah, all right, good.
don't
Just
worry.
checking. Thank
Don't
you.
worry, Joel. You'll prove that at the end of the
I
show.
was just going to say it's going to come up in
It
expenses.
predated the story, I think. Yeah.
Hey, but the interesting thing is, and Tim and I were talking about this off air, it seems the model is very similar to President Trump's model of they don't own a lot, right? They don't own a ton of real estate behind all of this. They own a lot of IP, intellectual property.
That's right. It's what it's called an asset-light model. That's what Hilton has. I mean, that's frankly what Airbnb has or Uber has too. I think the one thing that they were extremely successful was in a way that perhaps former President Trump was not, was just in terms of overseeing the quality of products they licensed their name to, enforcing strict quality standards. So they're very involved in the design process, the development of resorts, and the branding that goes into these things, just to make sure they live up to their standards. So there's not sort of the equivalent of, there actually is a Margaritaville University.
I was just going to ask if there was a Margaritaville University.
It's a funny name they use for a college ambassador program just to sort of get younger fans on board. So they're not actually teaching kids, but it was, I believe, a lot more successful than Trump University was. In terms of just some of the other ecosystem products they have, it's definitely that model of they like to sort of make sure you're drinking Jimmy's beer at the same time you're buying Jimmy's tequila, staying at their branded restaurants, and hopefully later on their hotels, their vacation cottages, and so forth. So it's sort of products that feed into each other in this virtuous brand loop.
So, Austin, how do they get the next generation of parrot heads? You mentioned the Margaritaville University, the ambassador program, but how do they make sure that this transcends age?
Yeah, I think what they're trying to do is make sure that this is identified with more of a lifestyle rather than an individual. In other words, I think a lot of fans, no matter how old, how young, will know that song and sort of can generally define what it stands for, and sort of in terms of this beachy cachet, a sort of vacation island vibe. And that's what they're building up more of. I talked to Warren Buffett for the story, and that was one thing he stood for. He sort of mentioned was that this idea that it's sort of, Jimmy is not just Jimmy. He's sort of an institution that stands for this overall lifestyle that, Lord knows Hyatt would like to have. Lord knows, Airbnb would want to, have in the sense of that this stands for something more universal. And I think that's how they're going to go after younger fans. They also have, Landshark Beer, which you might have heard of, which is a competitor to Corona. And they have a lot of consumer goods that are targeting younger generations of fans that, are just different from your average parrot head, I would say.
I think the article and cover story, it makes you look at your life and look at your choices. And it makes me want to build a business empire inspired off of a song. And also makes me wish I were Austin Carr and have $300 daiquiris that inspire these stories. So thank you, Austin.
We're on our way. Well, go ahead.
Oh, I was just going to say, just to be clear, Joel, I did not expense the daiquiri.
I know. Good man.
Needless to say, we're getting on a plane, we're coming over, and you got to make some daiquiris or margaritas for us. Great stuff. Austin Carr, it's the domestic cover story of Business Week magazine, tech reporter at Bloomberg News, joining us from LA. Joel Weber, editor of Bloomberg Business Week. I got to say, I love that the two Buffetts know each other.
No relation, though.
No relation. And yeah, Jimmy is definitely the other Buffett in our world, but clearly that world's bigger than his world's bigger than we knew.
Depending on your level of being a parrot head, right?
Yes, exactly.
I love it. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, it's coming up next. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've got the S&P up barely, up now by half a point, trading close to a record. Bonds are rallying as investors brace for a key inflation report that could provide clues about the direction of monetary policy. Sam Stovall is Chief Investment Strategist at CFRA.
The question is this the roaring 1920s or the beginning of the 1970s? Because with the worry, the focus being on inflation, with all the stimulus being very similar to guns and butter of the 1960s, do we end up with a decade of elevating inflation that then has to be strangled by a more aggressive Fed?
Sam Stovall with CFRA. We're looking at the S&P, as I mentioned, up now by 1 point. Little change there. 10-year yield, 1.48%. NASDAQ 100 index up 0.2%. NASDAQ Composite index also up now by 0.2%. The Dow on the minus side down 66, a drop there of 0.2%. Gold is down 0.1%, $18.90 the ounce. West Texas Intermediate crude down 0.4%, $69.76 a barrel. United Parcel Service down the most in 7 months after the Courier forecast profit margins that fell shy of expectations. UPS shares down now by 4.8%. Amazon fielding bids to replace JP Morgan Chase as the issuer of its popular co-branded credit card as a fresh wave of competition for new card customers emerges. Amazon shares today. Amazon right now trading a little change. JP Morgan Chase, JPM on the ticker. Right now also looking at JPM shares. Right now they are down $2.12. Coming up tomorrow after the closing bell, we will be hearing from David Busters and Chewy on today's report. I'm Charlie Pellet-Van, the Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So in about 90 minutes or so, we're going to get earnings from the meme stock that started all, I guess you could say. We're talking about GameStop. Tim.
Yes, but do earnings even matter?
I don't know.
For GameStop? I don't think they do.
They've added $21 billion in market value this year. $21 billion.
It's the original. It's the original meme stock, Carol.
Yeah, exactly. So, all right, let's get some perspective. And lucky for us, Bloomberg News equities reporter Bailey Lipschultz is with us on the phone in New York City. Bailey, good to have you here with Tim and myself. So, as Tim mentioned, the results that we get from GameStop, the fundamental earnings and sales outlook, does it matter?
Not really.
Okay.
All right, interview's over. We'll see you later, Bailey.
Analysts are looking for about $1.17 billion in quarterly revenue, but outside of that, there's really more of a focus on what's next. Obviously, they named Ryan Cohen chairman earlier today at their annual meeting, so that was a big news. Peg, and then he spoke to investors, which kind of took Reddit by storm. But for the most part, from a fundamental standpoint, I don't think you can get anyone to come out and say wholeheartedly that earnings today actually matter, given where the stock's trading.
Okay, so Bailey, what is that future that big believers in GameStop, people who've been behind the stock for months, what does that future look like? How does it compete with Best Buy? How does it compete with Amazon?
It's been pretty mum. Cohen came out today saying that he thinks they're going in the right place and they have clear goals, but didn't offer too much in the grand scheme of what that strategy looks like. Obviously, they've wiped out their debt. They're working on closing down storefronts, which were driving big losses before Cohen really pushed his way onto the board. But from a grand scheme of things, the idea is that he'll be able to do what happened with Chewy. Obviously, everyone said Chewy wouldn't be successful with your Petcos and PetSmarts, and then obviously online retailers. But video games is obviously much, much more difficult because you can download games straight to your PlayStation or straight to your Xbox, and you don't really need a company to deliver those products.
Right. Especially, I do wonder, is there a way like the Apple Store has created an experience where you go in and play with products? I mean, you can order a lot of Apple stuff just online, right? You can easily do that. Is there a way for them to create some kind of experience at a GameStop store that brings people in that somehow supports that retail environment? It seems far-fetched, but I'm just curious.
But that's been one of the things that, depending who you talk to and who are core believers, see as a potential option. Obviously, it as you said, it is a bit far-fetched and hard to wrap your mind around, but you could have them get into e-gaming in some capacity, whether that's sponsoring or owning a team professionally or building up kind of like a training ground built into the stores that you go and practice against peers in person and online. But that's kind of one of the things that more people I talk to want to see that laid out. They want to see the future vision and something that can justify a lofty market value that's kind of much larger than what it was when it was trading for about $4 last July.
Bailey, you mentioned Ryan Cohen. Talk a little bit about him and how important he is to the GameStop story, at least as the retail investors see it.
He's what you got behind. When he came out with RC Ventures and bought a 12 to 13% stake in the company, pushed his way onto the board, and obviously is now chairman. The company is looking for a CEO. So if you truly are investing in GameStop, you're a believer that Ryan Cohen is going to come in and he's going to do what he was able to do with Chewy. And there is a long-term vision where it can be very successful. I mean, the guy's only 35 years old, co-founder, obviously of Chewy, turned into a private equity investor, and has wiped out the board and really brought in alumni from Chewy and Amazon with a push towards consumer experience. So the goal is to kind of put your eggs in the basket, hold on for a guy who makes a lot of jokes on Twitter with memes, but seems very locked in and obviously pretty close off and hiding his cards.
Like, you do wonder, I mean, they did lease, right, a huge distribution center, right, 700,000 square feet in Pennsylvania to improve its distribution and delivery. So they obviously have high expectations. I do wonder, as you said, Bailey, they've gotten rid of their debt, so they have certainly improved their financial house. Are there acquisitions they could make that could totally kind of turn this company into something different that ultimately maybe is spun out or sold or acquired by somebody else?
I think that's the question. What is the big step? What is the big leap for GameStop? Do they get into game publishing? Maybe. I don't know. Do they find a way to partner up with some of the game producers, or, as you said, a real in-person experience? You look at like a Dave & Buster's. Is that something that a future could be like? It really remains to be seen.
Bailey, you're one of the guys who covers meme stocks here. You're one of the people who covers meme stocks, and I'm wondering, did you think that 5 months after what we saw earlier in the year with GameStop, we'd still be talking about GameStop, or did you think that this would be short-lived?
I thought we would be talking about it. I did not imagine that we would see a trend where the basket of the OG meme stocks is trading where it was back in late January, and I wouldn't have thought that AMC would take the world by storm like it has. Wendy's, you name the company, Clean Energy Fuels. People were making jokes about cow poop on Reddit. I did not imagine it would be this big of a deal and paid this closely attention to by core financial institutions.
I just, one of the fun things I did, Bailey, earlier today was like, who owns GameStop? And it's BlackRock. I mean, I understand it's probably in an index fund, right, and stuff. But and I know there's questions about whether it moves out of the Russell, correct?
And same with AMC.
Right. Mm-hmm. So I mean, there's a lot of big institutional investors, but Ryan cautioning that we've got a lot of work in front of us. I mean, this is not something that they flip a switch overnight, Bailey, and it's a different company or a different story.
Exactly, and it's very tough because as an investor, if you're an institution, almost $24 billion in market cap is really tough to get behind when you're just talking about a vision and what it could be, and this Herculean task that is to reinvent and recreate GameStop and make it a core part of the gaming ecosystem. It's obviously very optimistic, and there is a huge growth potential, but what does that look like? Because if you're managing a good amount of money, it's hard to get behind a guy who was great one time with a valuation where it is now and with the stock trading at $320 when it was, again, $4 about 11 months ago.
All right, well, we'll be watching nonetheless for GameStop earnings, and we'll see what happens on that report. Bailey, great stuff, as always. Bloomberg News equities reporter Bailey Lipschultz joining us on the phone in New York City. GameStop shares, by the way, they're up once again in today's trade. We're seeing a bit of a rally, up about 6.5%.
Wow, there it is. All right, earnings after the bell. In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden has arrived in the UK for an 8-day trip during which he'll speak with leaders of allied countries, plus hold a meeting with Vladimir Putin. Bloomberg's Irv Chapman has more from Washington.
The president spoke briefly before boarding Air Force One on his objective.
Strengthening the alliance, make it clear to Putin and to China that Europe and the United States are tight and the G7 is going to move.
President Biden was asked if he would offer a plan to make COVID-19 vaccines more widely available.
I have one and I'll be announcing it.
And he added that cyber hacking will be one of the subjects on his mind when he meets with Putin. In Washington, Irv Chapman, Bloomberg Radio.
As for that announcement on vaccines, he is expected to make a generous donation during this trip. The Washington Post is reporting he'll buy 500 million doses of the Pfizer vaccine to distribute to about 100 countries over the next 2 years. And the U.S. and the European Union are expected to back a new push to investigate the origins of COVID-19. Andy Pekosh with the Johns Hopkins Bloomberg School of Public Health says it's important to follow the science.
Understanding the precise way that virus moved is going to tell us something about how likely it is that some more of these coronaviruses that are present in bats might be able to take that same pathway and cause another pandemic.
Pekosh says the lines between science and politics driving the origin probe are getting blurred. The White House is dropping Trump-era executive orders that attempted to ban the popular apps TikTok and WeChat. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So I want to get to a story by our Leanna Baker and Jillian Tan. It talks about bankers, the investment banking world, specifically tech bankers, and how they are in demand as a lot of deals are piling up in a very, very busy M&A year, Tim.
Yeah, bankers have been on the move more than ever this year as deal-making booms and smaller advisory firms build their benches to win market share. Many of the defectors have one thing in common. As you mentioned, Carol, they are technology specialists who've seen demand for their skills soar as companies across industries hunt for tech deals.
Yeah, there's some movement. Boutique advisors have been prowling for talent at big banks for years. A recent exodus of the U.S. banking arms of Credit Suisse and UBS, their technology group has made it busier than usual for moves, according to financial recruiters. So we're talking about people moving around.
Yeah, 8 technology managing directors left UBS for SVB Financial Group's advisory arm. That even includes group head Jason Auerbach. That's according to Bloomberg News earlier this month. The group that departed was more than a dozen in total, including the more junior members of the team. That's according to people familiar with the matter who told Bloomberg News and asked not to be identified because the details are private.
Check this out. Credit Suisse has been trying to stem U.S. defections in the fallout from the implosion of Archegos Capital Management. At least 2 technology, media, and telecommunications bankers have departed for Barclays. B of A has also lost 3 senior tech bankers, including a co-head of investment banking, Jack McDonald, to Centerview Partners' Menlo Park office. That happened this month. Keep in mind, deals in the tech and healthcare sectors usually take the biggest share of all M&A deals. That's where it's happening.
And it's also not just the big banks, Carol. Regional banks looking to get in on deal making too. They're driving some of the hiring. Before it poached the UBS tech team, SVB Leerink hired 2 senior Citi healthcare bankers earlier this year, and Boston-based SVP is on a hiring spree too.
So there's a lot of movement. There's a lot of tech bankers in demand. And what's interesting, too, the banks are also turning to the tech industry themselves, or itself, I should say, including Morgan Stanley. They last year hired Brittany Skoda. She's a former Workday executive to be global head of software banking. She had previously worked at Goldman Sachs. It makes sense. They know the world.
A lot of people on the move this year.
Yeah, exactly. But this is where the deals are also happening, so it makes sense, too, that they are in demand. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've got the S&P flat on the day, trading close to a record. The Dow on the minus side, NASDAQ pushing higher. Let's get all the details as we head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed today in somewhat quiet trade. Dow's down 82 points. Like you said, S&P is a little changed. NASDAQ is higher by 18. The U.S. 10-year yield at 1.48%, thus far holding the key 100-day moving average. Gold is down 2 points, and transports fall 158 points amid weakness in UPS and FedEx. Among the main 11 S&P sectors, healthcare and utilities led. Financials and industrials were under pressure. And leaders to the upside in the Dow, Merck and IBM, while JP Morgan and Caterpillar led to the downside. In other news, IBM tells its U.S. employees to return to the office in September. The U.S. said the Iranian nuclear deal talks to resume over the weekend. And brokerages fell intraday after the SEC chairman called for a review of trading rules. Wrapping things up, GameStop reports after the bell. Shares are up 6.5%. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And here live, breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Well, it is time for the Bloomberg Big Take. It's also among our most read stories on the Bloomberg about the oil majors. You know them well, Exxon, Chevron, how their retreat, and we'll explain that in a moment, doesn't mean, Tim, an end to fossil fuel.
Kevin Crowley is U.S. oil reporter for Bloomberg News, joins us on the phone from Houston. Kevin, congratulations on this big take. First of all, explain who the super majors are and why their retreat from certain areas is a win for state-owned oil companies.
So the super majors are the five big Western oil companies. We're talking Exxon, Chevron in the US, and then in Europe, Royal Dutch Shell, BP, and Total of France. And collectively, they're known as Big Oil. And the story here is that Big Oil is not so big anymore. We've seen them miss shale, and then the coronavirus last year hit them really hard. And so they're shrinking really in three ways. They're selling assets, spending less capital on new projects, and also, especially in Europe, they're pivoting towards renewable energy. Now, assuming demand, we're saying demand for oil and gas remains strong, which it seems to be doing coming out of the pandemic. This conveniently, the pullback of big oil conveniently opens the gate for national oil champions in Saudi Arabia, Russia, UAE, to come in and fill the gap. And those countries are forecast to make up much more of global supply going forward.
And a big part of that is because they don't necessarily have the same pressures that the super majors are facing right now. And I think a great example of that is what we saw just a couple of weeks ago with the tiny hedge fund, Engine Number One, and what happened with their tiny share, but they were able to make a big splash with Exxon.
Exactly. I mean, big oil companies used to be seen as untouchable. They used to provide enormous dividends to pension funds all over the world. But as we've seen over the last couple of years, and certainly in the last couple of weeks with Exxon, is that shareholders are really rounding on these guys now, especially on climate concerns. National oil companies, on the other hand, there's far less scrutiny, there's far less shareholder pressure, and their only primary mandate is to make money for the state. So they can operate in ways that big oil companies, the Western super majors, cannot anymore. And Exxon was really seen as the big beast here. And so the fact that a small hedge fund can make such significant changes at Exxon, I mean, they kicked out 3 of Exxon's directors. The fact that they can do that means every oil company every privately owned or publicly traded oil company in the world now is watching this with great concern.
All right, so lots of pressure on the major integrated oil companies. So what does this mean as we see the likes of Exxon and Shell, doing a lot of divestment deals? What does this mean ultimately for fossil fuel, for emissions, and for the environment?
Well, when big companies they divest assets, see the company itself can look better because they're producing less emissions. This is certainly the case with BP. But of course, those emissions don't go away; they go to the buyer. And what we're seeing now is many of the buyers of these assets are in either private equity or national oil companies themselves, or smaller players around the fringes where there's a lot less transparency, a lot less scrutiny, and a lot less will to reduce emissions. So really, we're saying here, while the majors may be the low-hanging fruit here, there's still a lot of work to be done in order to reduce emissions on a global scale as a whole. And really, it comes down to demand. Unless people stop using oil and gas, someone will fill the void to produce it.
That's what I wanted to ask you specifically, Kevin, is demand for oil is still up and will be up for years. So I do wonder how this changes kind of the geopolitical world, or how this changes our environment. What's our big takeaway, if you will, for the Bloomberg audience?
Yeah, so demand is really is forecast to continue growing for definitely the next decade or so. People are very split as to whether it will begin to tail off after that or not. But really, while the demand is there, someone will step forward to produce it, and so I think a lot of climate campaigners will now start looking to those private industries and those national oil companies now to reduce their emissions on the side. But it's a reminder really that consumer behavior really needs to change,
right.
And that could well happen too.
But does it mean from an investment perspective that investors should be, that's what I'm curious, just got about 20 seconds here. Should they be thinking differently about these integrated oil companies, just quickly?
I think in the short term, this is good for investors because big oil companies will be spending less on big oil projects. But in the longer term, the jury is still out whether they can make money in renewables and cleaner tech.
Well, it's a story that certainly gets you thinking, and that's why it's the Bloomberg Big Take today. Also among our most read stories, Bloomberg News U.S. oil reporter Kevin Crowley on the phone from Houston. Coming up, the chart of the day.
And the song of the day.
Yes, indeed.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So can I just say, I miss Dave Wilson wearing his fun ties. I'm going
you
to
do?
start lobbying to get them back.
Okay.
Now that he's a big star on TV, they've kind of...
I might be able to do something about that, okay?
They kind of
I
did
have
something about his
connections.
wardrobe.
I have connections.
So we're going to work on that.
Okay.
Anyway, he's coming up with his chart of the day, so we'll get to him in just a moment.
Also, song of the day. In the meantime, though, let's get the latest on the trading day with Charlie Pellet.
Thank you very much. We got ourselves a late day fade right here. Worst level of the day right now, right to the numbers. We'll give you the why in just a moment here. S&P now slumping by 3 points, down less than 0.1%. The Dow now down 119 points, down by about 0.4%. Nasdaq lower by 3, a drop there of less than 0.1%. Mega cap technology and biotech stocks are driving earlier gains. Right now, though, those gains are faded. We did have the S&P close to a record, but right now the S&P on the minus side, wave of selling here in the final half hour of trading. We've got the S&P lower right now, little change, down by 3 points. Bonds are rallying as investors brace for a key inflation report, the CPI report tomorrow morning, that could provide clues about the direction of monetary policy right now. 10-year yield 1.48%. Gold is down 0.2%, 18.89 the ounce, and West Texas Intermediate crude down 0.5%. WTI back below $70 a barrel, 69.72 right now on WTI. The European Parliament has approved vaccine passports, a key step toward easing travel across the European Union as the summer vacation season nears. Pfizer and BioNTech's vaccine is being tested in children less than 12 years old in a late-stage study seeking to extend COVID-19 protection across the entire range of ages. Dr. Bhakti Hansadi is Assistant Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, and she was interviewed this morning on Bloomberg Radio and television.
So clinical trials from 5 to 12-year-olds are already on the way. Pfizer has not reported any significant increase in adverse events. The dose has been reduced for children between 5 to 12, and this seems to be working well. I think by fall you're going to have FDA approval for 5 to 12, and I have a 3 and an 8-month-old, so I'm really praying that by the new year, my little ones will be vaccinated too.
Associate Professor Bhakti Hansadi at Johns Hopkins, the Johns Hopkins Bloomberg School of Public Health, is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, they're all higher today. Pfizer up by 2.4%. Its German partner BioNTech, the ADRs up 9.55%. ADRs of AstraZeneca up by 2.1%. Moderna up 1.8%. J&J Johnson & Johnson up now by 1.3%. Again, recapping, the equities lower with the S&P down 3, a drop now of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
He's not alive anymore, right?
No, he's not.
It's I'm just spacing on his name. Space. I'm trying to think.
Well, space is actually not a bad clue because
Right.
one of his first hits was Space Oddity.
Carol's looking at me
right?
like I know the answer to this.
Modern Love? No.
Yeah.
Yeah. Why can't I think of his name?
I have no idea.
Come on, you know who it is.
Don't know who it is.
Well,
Do you know who it is?
I'm going to give you a hint.
Oh, Bo. Is it Bowie?
Yes, it's Bowie.
Nicely done.
Wow.
Absolutely. From 1987 as it happens.
Yeah.
Day in, day out.
I just had to listen to the voice. That's a great one. I like that.
Yeah, well, there
All
you
right,
go.
So wait, the song is what? Day in, day out?
Day in, day out.
Okay.
So pay attention to what's going on in S&P 500 stocks day in and day out, and you find some support for what we've been seeing with the index itself over time. You know, it's something that J.C. O'Hara did. He's the chief market technician over at MKM Partners, and he looked at what's called a cumulative advanced decline line for the S&P 500. So, you know, basically, comparing the number of rising and falling stocks within the index each day, taking the difference and then adding it up over time. So there's your cumulative part. And when you take a look at the line that we have here at Bloomberg, you find out that it set a record just this past Friday at a time when the S&P 500 itself struggled to follow suit. I mean, we've gone a month, a little bit more than that actually, since the last time the index set a record. But when you look at individual stocks and how they're doing on balance, I mean, O'Hara called it a sort of a pillar for the market, the strongest technical pillar he sees.
This is a technical I find that's kind of gratifying because it really does talk about kind of the underlying fundamental. You look at an index, but when you dig a little bit deeper, it gives you an idea that there's more optimism within the market.
Right, and it goes back to a time when there was less focus on what you call equal weight indexes, which kind of get you to the same place, other indicators like that. But, AD lines, I mean, I've worked with them for decades in one form or another, and they're really telling a story of strength in the market at this point. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Very difficult to turn negative is different than, outperformance or some sort of rally.
Yeah, well, that was his comment. And again, it's a matter of, is there enough kind of support for what we're seeing? Last couple of years, how often did the argument come up that it was just the biggest companies, the biggest stocks leading the way, and everything else was not really keeping up?
That was the narrative.
Yeah, that was the narrative. And what this tells you, something like the cumulative AD line, is that, kind of pokes a hole in that narrative because you are seeing, broad-based gains at least.
Yeah, I just like it. And maybe it gives us an indicator, especially when people start to talk about, maybe the market going nowhere. When you start to look and dig a little bit deeper, right? Dave, you get some clues about maybe actually where we are going. Trend lines can be really helpful. Always helpful is your stock of the day. What do you got for us?
This one is Option Care Health. The ticker is OPCH. Shares rose to their highest price since February 2015. And it's a company that does home healthcare infusion services. Well, as it turns out, remember that drug from Biogen, the Alzheimer's treatment?
Right.
It's going to be a once-a-month infusion. Right. So that analysts are figuring that this company, Option Care Health, is going to benefit from the demand for the Alzheimer's drug.
If you can afford it, because we talked about the cost.
$56,000 a year.
And then the infusion costs. I mean, there's multiple costs.
The imaging costs associated with it.
Yeah.
Well, anyhow, you've got folks at Deutsche Bank saying that this company could capture 20% of the market, and that means revenue projections going higher. So that's the key here. OPCH is the ticker, by the way.
Stock up 39% so far this year.
Yeah.
Check out Dave's Stock of the Day after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter.
All right, time for a check on world and national news. Nancy Lyons, take it away.
Thanks so much, Carol. President Biden is in England, where he's about to give a speech to our troops there. It is the first stop on an 8-day trip that will take Biden to 3 countries and multiple summits. He's expected to announce while overseas that the U.S. will buy 500 million more doses of the Pfizer COVID-19 vaccine to share through COVAX, the alliance set up to help lower-income countries through the pandemic. The Associated Press reports 200 million doses would be shared this year, with the balance to be donated in the first half of 2022. Well, now that President Biden has announced an impasse in infrastructure talks with Republican Senator Shelley Moore Capito, about 20 bipartisan lawmakers are meeting in hopes of reaching a consensus. It's possible Democrats will pass a bill without the support of the GOP, but Republican Senator Rob Portman of Ohio says he hopes it will not come to that.
There's a willingness to try to get to yes on both sides, and we need to take advantage of that and do it. And it would be a good thing to do for the Senate right now, for us to come up with a bipartisan approach to something that's so important.
Portman says raising taxes, though, would be a huge mistake. The White House has proposed rolling back corporate tax cuts in order to pay for the bill. A lockdown that's been in place at an Air Force base in San Antonio has been reduced. Police and military officials had been searching for 2 people suspected of shooting into the base from outside. Officials said 2 people reportedly fired the shots toward an area where base personnel were training before then running off. No injuries or deaths immediately reported. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
You like diamonds?
Yeah, sure.
He's like, no. Sir.
Look, where do I go with this?
I don't know. So there's
love diamonds.
A story that caught my attention, my attention, let's be honest. Secretive World of Diamonds is in the grips of a buying frenzy. At the latest De Beers diamond auction this week, buyers shopping for the kind of stones used to make an average engagement ring, whatever that means, were in for a sticker shock. Some prices had ballooned by 10% since the last sale.
News of the unusually sharp increases spread swiftly through the community of 80-odd hand-picked De Beers customers. That's according to people familiar with the discussions. But what followed was even more remarkable. Within hours, some of those same stones were trading hands at a further 10% markup as buyers who have access to De Beers flip them to traders and manufacturers that don't.
So I guess here is some of what's going on. According to our reporting, diamonds have been a big winner from lockdowns around the globe as access to rival luxury offerings was limited. The first showed with stronger than expected holiday sales from Thanksgiving through to Chinese New Year and has since continued. So the rough market, rough diamonds, hot, according to one source in the story. There's enthusiastic buying across all rough categories. There are supply shortages at the moment. That's creating a sense of scarcity at every stage of the pipeline. I have to say, what?
I'm just thinking, is the price increase transitory? Is the supply shortage transitory?
Diamonds, I've watched lots of documentaries about diamonds because it's very interesting. It is such a supply and demand. It's been such a controlled marketplace. And I find more fascinating some of the synthetic diamonds that they're being able to do because I do feel like, up until 100 years ago or something, diamonds weren't what people got when they got married. It was often a colored stone or an heirloom. It's just this interesting market that has been very cultivated and very marketed over time.
And it's a market that a lot of young companies are betting can be changed by synthetic diamonds, and that's something that's certainly to keep an eye on. Carol, the reason I hesitated when you asked if I like diamonds is because that question, it brought back so many memories of when I got engaged and how much I learned or was forced to learn about diamonds, and it was an interesting experience.
But you realize what a controlled market it is, right?
Yeah.
And that's what really determines so much of the price. Anyways, a fun read. Check out more at Bloomberg.com. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all declining right now. Looking at the S&P, just about the worst level of the day, down 5 points right now. Have been flirting with a record, but the S&P now down 0.1%, 42.21 on the S&P 500 index. The Dow down 130 points, down 0.4%. NASDAQ Composite Index down 11 now, down 0.1%. The NASDAQ 100 Index up by less than 0.1%. 10 years up 14.30 seconds. 10-year yield now at 1.48%. Gold is down 0.2%. 18.89 the ounce. Bitcoin up 7.1%. 36,030 right now on Bitcoin. And West Texas Intermediate crude 69.74 a barrel, back below $70, down now by 0.4%. I'm Charlie Pellet. That is Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it, everyone. Just about 10 and a half minutes left in today's trading session. It is time for the drive to the close. We've been bouncing around, but we've took another leg down in the last hour or so we're near our lows of the session. Let's bring in Julian Brigden, co-founder and president of Macro Intelligence, our MI2 Partners. It's a global macroeconomic research firm that's been around for a decade. Julian's with us on the phone in Colorado. Julian, how are you?
I'm fantastic, thank you very much. I was just listening to the weather forecast and realizing why I'm glad I moved to Colorado.
Hey, way to rub it in, okay?
Exactly.
Sorry about that, yes.
300 days of sunshine a year, skiing in the winter. All right.
It's a little rough here right now. Not for you, though. Markets, make sense of it for us right now. We did see a leg down in the last hour, down 137, as Charlie just mentioned, on the Dow. So little change, though, overall, when it comes to the S&P and NASDAQ. It feels like we're waiting for that inflation report tomorrow, but how do you see the trade right now?
So I think these are incredibly calm markets. I mean, there's really very, very little going on. It's almost as though the sort of world's decided post-COVID, or certainly the US has, that they're going to disappear on vacation early for the summer. But I do think...
What do you mean calm, though? Lack of volatility, or just... What do you mean?
I mean, it's just lack of clear direction, I think, to be brutally honest. I mean, we're stuck in relatively big ranges, whether you look at FX, some commodities have come off the board a little bit, equities really sort of quite quiet and a little boring, and volumes that seem to be very lackluster. As I said, it almost feels like an August market a month early or too early.
But do you remember in summers past, at least pre-COVID, that we saw, I want to say in 18 and 19, maybe even before that often all of a sudden late summer, I only know because I'm often on vacation, that the market comes apart and we have a big sell-off.
Yes, and I don't really see that so much this year, I've got to be honest with you. I mean, I think, there are some very important events coming up. We do have, obviously, the ECB tomorrow, and then also we've got this inflation print. But I think, when I look at the inflation story, and I think it's a huge story, and I'm not as sanguine as the Fed when it comes to this assumption of transitory, at least I think from a market perspective. I mean, I think the Fed would argue that they're transitory maybe 2 years out. I really don't think the market's going to give them the benefit of that doubt. But when I look at tomorrow, I'm looking for a pretty high number. Our work suggests that we could be looking at a number in the very high fives, possibly as high as 6 for the headline CPI.
Wow.
I think, and it's just, look, I mean, in part, Tim, it's just base effect. It's a natural way of doing that. But when you look at simple things like how high PPI is going and the rate of change on those, you can pretty much get a pretty good estimate for CPI. And I know Jay Powell has told us that companies will be reluctant to pass on price increases, but I'm calling his bluff on that one. I think we can see it in every single CEO conference call that when you create essentially inelastic demand by, stimulating the economy to this degree and then opening up, then companies do have pricing power. And I think CEOs are taking it with both hands and using that to push on those increases. So I think you get a high print tomorrow. Then I think we settle down, and it's a waiting game, because we now have to, and that by definition is we have to discuss this transitory, and that doesn't happen in a month. It might happen in 3 months, it might happen in 6 months, but it becomes a much more, as I said, it becomes a waiting game and not a sort of, where's the peak, let's pin that, tail on that.
So Julian, if there is a high print tomorrow, what happens to the equity market? How does it respond?
Look, I mean, the first question is what happens to the bond market. I mean, the bond market has
settled down
quite significantly.
Yeah.
I mean, really coming quite a lot. And I do think, in part, Carol, that's because people recognise this is likely to be the high print, right? Just from a base effect perspective. And then, as I said, we go into this longer, more elongated debate. But obviously, I think if you saw a number of this magnitude, mechanically, you've got to see a move in things like break-evens, which should put some pressure on nominals.
Well, Julian, but as most of us, as I know, I've got my logical brain and I've got my, oh my God, look at that print. Our Bloomberg intelligence team has been reminding us that it's all going to take more time when it comes to these inflation numbers and really economic data points. And they're talking about into 2022 to fully separate when it comes to things like, the transitory forces pushing prices higher than durable increases in inflation. Will we be logical, though, when we see kind of a crazy print tomorrow, do you think? Especially when we're waiting kind of on earnings and that next batch of reports where CEOs give us some indication of what's going on.
So, look, I mean, I think there's enough stimulus, there's enough economic momentum in the economy. I mean, if I just look at, say, the inventory cycle, it's only really starting now. I mean, we can barely get ahead of the thing. When I look at the CapEx cycle, to me, this seems early cycles type stuff. I mean, I think we've got enough economic momentum to keep this economy going into the middle of next year. So, look, if you get a knee-jerk reaction on the NASDAQ, and I do think that's a market that still looks very, very expensive, or should we say growth, in inverted commas, versus value looks still extraordinarily expensive, even where the bond market is now. I mean, our work suggests that ratio between, say, the S&P Growth Index and the S&P Value Index should be 30% lower, even where bond yields are now. That we could continue some of this sort of rotation game, and you could get a knee-jerk reaction tomorrow. I'd love to say I think it's going to be extraordinarily volatile, because that's what makes our day. I think we're going to be turning our wheels for a little bit.
How do you think equities are priced right now relative to where you think the economy is going? Because you said the economy can continue strong into 2021, or 2022, excuse me. But I'm wondering what's priced into equities right now.
And you said NASDAQ, and you think growth look expensive.
So I think in general, I think the US looks extraordinarily expensive. I like to be invested in equities. I think, macro guys, and we always get a bad rap for this, constantly want to pick the tops in things, but we all know that you don't really make that much money doing that long term. You've got to be invested. And when I look at US markets, they are extraordinarily high. I mean, extraordinarily high.
But just to wrap up, Julian, maybe not, though, if that's where the growth is ultimately. Like, if the U.S. market is leading in terms of growth, right, don't we have to compare to kind of what's going on around the rest of the world?
Not really, because I think one factor that people don't necessarily take into account is the role of the dollar and the ability of the dollar to sort of suck in that flow of funds that prop up those equities. And I think now that the dollar has started what I think is going to be a multi-year decline, I mean, the sort of thing that we saw between, say, 2002 and 2008, where the dollar dropped 40%, U.S. equities tend to underperform in that environment because foreign equity investors tend to take their money home because they don't hedge. So every day when they wake up their statement and they see, oh, well, look, the NASDAQ's up a few percent. Oh, wait a second, the dollar's down an equally offsetting amount. They're not making any money in their own currency. So I think, to me, that's an important point going forward.
Hey, go ahead, Carol.
No, go ahead, please.
I was just going to ask about wage growth and how important wage growth is. Because 20 seconds. 20 seconds.
No. Extraordinarily important. And I think the big mistake the Fed is making is that they viewed this as an 08-09 type situation. When you look at the numbers, they look nothing like that. We're not dropping anywhere close to that degree. So we're starting at a much higher level, Tim.
Yeah, it definitely feels like a different thing. What fun. Come back, please, soon. Julian Brigden, he's co-founder and president of the Macro Intelligence, or MI2 Partners, as we mentioned, a global macroeconomic research firm that's been around for about a decade. All right, we've just got a few minutes left in today's trading session. We're just hovering near our lows of the session, as we mentioned, down on the S&P and the Dow and the NASDAQ, the Dow down the most on a percentage basis. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Caroline Hyde, Taylor Riggs, counting you down to that closing bell, and here to help take us beyond the bell, our global simulcast team. Carol Master, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide, parsing the crucial moments of the trading day. Carol, another day where the market seems to be treading water.
Yeah, absolutely. Although we did take a leg down, I feel like in this last hour, if you look at the indices, we're going to finish on those major equity averages pretty much at our lows of the day. It does feel like everybody's kind of crawling towards tomorrow's CPI report. It's a reading for the month of May, but we could get a pretty sharp print, and we'll see whether or not investors are ready for it, Tim.
Yeah, the question is what happens to the equity market, but more so what happens to the bond market if we get a print that is relatively high. But if you look at bonds right now and what happened today, the 10-year yield falling below 1.5% for the first time in a month, investors essentially saying, hey, wait a second, we're starting to buy this transitory story from the Federal Reserve.
What inflation?
Yeah, exactly.
And that was huge, I think, particular coming into a more than $30 billion 10-year auction today at 1 p.m., Caroline, when you had yields come down yesterday and then a sense of this auction of, will it go well? Is there a demand at 150? Yeah, to say the least, there was demand, one of the strongest demands that we've seen in quite some time.
And we've got a 30-year auction again tomorrow,
yep.
So still plenty of supply coming, but those yields still tracking lower, Romaine.
Yeah, amazing that the appetite continues here despite the drop in yields. I guess this is going to have some big implications, particularly if the data, as is expected, materializes tomorrow in a way, looking at 4.7 on a year-over-year basis on that CPI number, obviously month to month, a little bit lighter, but nevertheless, something that could be a concern here for the markets. As we get the closing bells here on the day, you're looking at 42.19. This is around the lows of the day right now here for the S&P 500. Looks like it's going to finish down about 0.2%. The NASDAQ composite down 0.1%. We should point out the NASDAQ 100 is actually higher in the green by less than 0.1%. Dow Jones Industrial Average lower by about 151 points, down 0.4%. And the Russell 2000 down 0.7% here on the day at the close.
Yeah, and we saw a fair amount of groups, though, kind of for most of the day in terms of those major industry groups actually trading higher. So we saw kind of an even split in the S&P 500 for much of the day. So there were a fair amount of stocks that actually posted some decent gains, Taylor.
And you certainly see that on a sector level, Carol. For our radio audience, we're taking a look at the gainers, but there are three red sectors, of course, even in the gainers section. This really is defensive, Carol, with utilities, telecom, technology, real estate, some of those bond proxies, defensive sectors that are up anywhere from 0.3 to almost 1 or 2%. We migrate downwards to the bottom, and well, with yields falling, so too are banks and some of the transportation companies. We're having a great conversation about FedEx and UPS really needing to start heavily investing at this time.
All right, got to talk about, I can't believe we have not said meme stocks, and we've been a few minutes in here, guys. It's like the meme stocks yesterday are so yesterday. Forget Wendy's, forget Clover Health, because I've got a new batch for you. One of them is GEO Group. This is a REIT. It's a specialty REIT. It has prisons mostly in the United States. It is up almost 38% in today's session, up 8 out of the 9 past trading days, gain of about 82%. So unbelievable. A little perspective, it's still down about 70% from its all-time high back in 2017. Clean Energy Fuels, another meme stock, up about 31%, up 46% at its high today. It's up 6 out of the past 7 trading sessions. It's an operator and builder of natural gas filling stations for vehicle fleets. And then let's get a little bit to more normal stories. Fox, I'm looking at Class A shares. They were among your top gainers in the S&P and the NASDAQ 100. Fox upgraded traded at Wells Fargo on expected sports betting pivot. They like that. So an upgrade to overweight, upping the price target to 47 a share from 42. Twitter also getting an upgrade in today's session. Very positive from Mixed Positive by Vertical Group. They like the flow of new brand campaign promotions and product releases. Twitter up 1.5% today, and Fox shares, Tim, up almost 3%.
Okay, you might have forgotten about Clover Health, but I certainly didn't. It was among the big notable decliners today, down by more than 23%, but higher by more than 85% yesterday, more than 32% on Monday. AMC down more than 10% today. Dish got downgraded to underweight from neutral. Carolina, JP Morgan down more than 7%, and then UPS down nearly 4%, shares dropping the most in 7 months after the company's profit margin outlook. Caroline disappointed investors.
Let's go cross-asset. As you look at the downside of the equity market, I look at what's down, but basically most of the major currency pairs versus the US dollar. Now, I'm looking at the global macro movers for our radio audience, for those on YouTube and TV too. I'm looking at the yen off by 1/10%, the British pound off by 0.3%, but the US dollar was off by about 0.3%, and it moved higher throughout the course of the day, basically ending the day flat. US dollar sort of trying to digest where we look ahead to the CPI data coming out tomorrow. We're basically treading water in the FX markets as we look ahead to that all-important reading coming out tomorrow. Also treading water to a certain extent was the commodity sector. I'm looking at oil, WTI crude off by 0.5%, $69.72, so close to that $70 level. It's still elevated. We actually saw some supplies, some inventories pick up in the United States, just pushing down a little bit, even though we are in the midst of getting in our cars and driving season here in the United States. Steel up a percentage point, some big news on coal in terms of China trying to push back against some of the rallies that we've seen in certain commodities. But I take it to Taylor's favorite. We end on what's happening in terms of bonds, sovereign bonds. In Europe, it was a story of yields going lower. Remember, we've got the ECB tomorrow as well, Taylor.
And that story continues in the U.S. It is rate of change on the way down. We're down 4 basis points yesterday on the 10-year, an additional 5 basis points today as we now hover at a 1.4874, a 10-year auction that was really, really well received. We're really catching a bid all across the board as you guys, inflation sort of seemed to take a back seat. And I think, Carol, there's a few things that really stick out to me. I mean, one, just a technical level. I was reading a note from B of A strategist saying that a lot of corporations, corporate pension funds, institutional investors could be taking out some of the gains and equities and pivoting. They are coming for your bonds. Dan Suzuki echoed that comment about some of the technical factors. And then just from a macroeconomic, perhaps maybe the Fed was right. A lot of these inflationary fears were indeed transitory.
Well, think about what our Bloomberg intelligence team has been saying. They think it's going to take several reports, maybe until 2022, until we kind of get through the pandemic effect on all of our economic data points, including inflation. And so we need to remember the April increase in CPI was the biggest since 2009. Get ready for maybe a sharp print tomorrow, and whether or not investors are ready to say, wait a minute, let's remember we're still dealing with pandemic impacted data, guys.
Yeah, but you have to look at the trend line too. And I mean, the trend line has been relatively consistent here. And yes, obviously these month to month and year over year changes are going to look absolutely crazy because of the base effects here. But we've heard from a lot of economists, including Claudia Sahm earlier this morning on Bloomberg Surveillance, who talked about this idea of that trend line. And as long as you keep an eye on that, Taylor, I think in general, the market can maybe find a little bit of comfort in that.
We are getting some very interesting news from GameStop. Of course, we had the annual shareholders meeting. We're waiting earnings after the bell. But they are now coming out and naming a new CEO, Matt Furlong. Caroline is going to dig into the numbers to figure out some more, I think, information. But we're going through the press release. They have Matt Furlong as Chief Executive Officer and Mike Recupero as Chief Financial Officer, both joining from Amazon, where they held senior roles and oversaw various growth initiatives. We indeed did hear from the company saying, buckle up, we have huge strategic announcements to announce. They were not yet ready to do that, but wow, stealing from Amazon certainly shows that this company trying to do what no other retailer has done.
Yeah, look, shares higher in after-hours trading by a little more than 2% as investors digest this news, Caroline. I think the big question that investors have, and these are the believers in GameStop, is how does it pivot to a company that is more like Amazon and less like a traditional physical retailer, less like the GameStop that so many of these retail investors actually went to when they were younger, the brick-and-mortar stores. How does it do that transition that Ryan Cohen, formerly of Chewy, is going to help facilitate?
And Ryan Cohen has been doing it by hiring from Amazon, like the of CTO. They've been putting in chief business officers in place. And now to have a new CEO who's a veteran of e-commerce, really overall, Mr. Furlong, I mean, he also comes from P&G as well, so he understands brands, he understands basically consumer goods as well. This is all about trying to get that into the e-commerce spectrum and not share some of the tactics though either.
And the idea though here, Caroline, that Ryan is actually able to actually recruit these types of people away from what are clearly large established companies to a company that I guess, to put it mildly, maybe has a somewhat uncertain future. And maybe that says a lot about what the potential is there for GameStop, and maybe it says a lot about Ryan Cohen himself.
Well, Ryan Cohen, who was also named chairman of the company today, you know, what's interesting is he's come out and said, folks, you're going to have to be patient. We're not going to fix this company overnight. And it doesn't know what it really wants to be. Does it become an experience where people go to the stores? Does it become a company that works with game publishers? What do they need to do to kind of reinvent themselves so that there's longer term duration, you guys, for this company?
You're getting some financial background as well, Caroline, for the chief financial officer coming from Amazon, where he's the chief financial officer of Prime Video. He's overseeing the consumer business as well. So as you think about a company trying to reinvent itself from a financial perspective, investing in growth, you're getting some pretty big chops here as we continue to await earnings that might be overshadowed by some of this news.
Yeah, I guess like the big question is if earnings for GameStop even matter. Many analysts would argue that this is a company whose stock price is completely disconnected from the fundamentals. So it doesn't matter necessarily what numbers the company ends up printing for the most recent quarter because those investors are not necessarily trading on that.
You mean being up 1,500% is a disconnect from
I'm just saying
fundamentals?
that some analysts might argue that, Carol.
All right, so we'll wait for those numbers. All right, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same place, same time tomorrow.
Meanwhile, we go.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so still waiting for those earnings from GameStop. Stock is just a little bit higher, up about 1% in the after hours. But, you know, it definitely looks like a pivot to e-commerce. And so does that mean ultimately that they get rid of the stores? And are they an online distributor?
I'm just seeing some earnings numbers now, Carol. GameStop first quarter net sales, $1.2 billion, $1.28 billion, beating estimates of $1.17 billion. Adjusted loss per share, beating estimates as well.
Exactly. Quick check.
Coming in below estimates, I should say.
Quick check on the stock here for some reaction. We're now down about 2.5% here. All right, Tim, we will see you tomorrow. You're listening to Bloomberg Business Week. Let's get a check on world and national news. Nancy Lyons, all yours.
Thanks, Carol. President Biden is in the United Kingdom for the start of his first overseas trip since taking office. He's been speaking with our troops at Royal Air Force Base Mildenhall, the home of the U.S. 100th Air Refueling Wing.
This is my first overseas trip as President of the United States. I'm heading to the G7, then to the NATO ministerial, and then to meet with Mr. Putin to let him know what I want him to know.
Biden is also set to announce this week that the U.S. is buying 500 million COVID-19 vaccines from Pfizer to donate all around the world. 18 states have passed laws that allow college athletes to get in on the game of lucrative endorsements of commercial products. Members of both parties on the Senate Commerce Committee support a federal law. They held a hearing today on how to do it.
Mark Few, longtime coach of basketball powerhouse Gonzaga University, was the leadoff witness.
All athletes deserve to use their own name, image, and likeness in commercial endorsements, profiting as much as they possibly can.
Mark Emmert, president of the National Collegiate Athletic Association, agreed.
We are urging Congress to pass legislation creating a single national standard.
Chairwoman Maria Cantwell asked Emmert about a provision for colleges to cover years of medical costs for injuries from concussions to heat stroke. Emmert said his members could be polled on whether to create a fund for schools that can't afford it. In Washington, Eric Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So shares of GameStop just coming out with their earnings. Stock is down of roughly about 6% here in the after hours. Let's rehash the headlines here. First of all, it's continuing to suspend guidance at this time. First quarter net sales, $1.28 billion. That's a beat. The estimate on the street was $1.17 billion. First quarter adjusted sales, we're talking about a loss of 45 cents a share. That is better than what the forecast was among the analyst community. They were looking for a loss of 71 cents a share. But I do think, Tim, safe to say, continuing to suspend guidance at this time. It shouldn't be a surprise, but that can be a little troubling for investors.
Moving the company's stock right now down, as you mentioned, shares continuing to drop, hitting as lows as much as 7%, but off those lows right now, down just about 4.5%. Gross margin of 25.9%. It's a 180 basis point decline from the year prior, but slightly better than expectations for 25.8%. Net sales, you mentioned, Carol, but just to reiterate, they grew 25.1% to $1.277 billion, higher than the consensus for $1.17 billion, but lower than the street high, which called for $1.24 billion.
I think it's safe to say that today was a lot about, hey, folks, here's the team that we're going to put in place to try and make things happen. First of all, the activist investor, we're talking about the co-founder and former CEO of Chewy, Ryan Cohen. He was today named as chairman of the company. They have a new CEO, Matt Furling, who was most recently was a country leader and oversaw Amazon's Australia business. Previously was a technical advisor to the head of Amazon's North America consumer business. And then they have a new CFO, Mike Recupero, I believe it is, who spent more than 17 years with Amazon supporting growth access, or growth, I should say, across global geographies and product categories. Most recently, he was CFO of the North American consumer business. So leaning heavily into Amazon execs.
Yeah, heavy into e-commerce.
And
and think about the history of Chewy.com and the way that it reinvented the pet food category. I think the big question that a lot of analysts would have right now, okay, that makes sense, but is it too little too late? And to what extent can it actually pull off a pivot in enough time?
That's exactly. And what does the company want to be in the next iteration? I mean, this is a stock. We know it's been one of the favorite meme stocks, up 1,500%, more than 1,500% this year. It will be a stock we'll be talking about tomorrow. You have a good night.
Thanks. I'll see you tomorrow.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
GameStop shares now higher after hours, have been down roughly 5% right now. GME GameStop up by just about 1%. GameStop making a number of announcements after the bell. It is hiring some Amazon executives, Matt Furlong and Mike Recupero, to be the CEO and CFO respectively. Furlong spent almost 9 years at Amazon, was most recently a country leader and oversaw Amazon's Australia business. Recupero spent more than 17 years at Amazon, most recently CFO of the North American consumer business. But after initially moving lower after reporting earnings, GameStop shares now higher by just about 1%. Turned out to be a down day on Wall Street. A lot of that selling in the final 30 minutes of trading. Stocks closing at the worst level of the day. Bonds held gains as investors await that CPI report tomorrow morning that could provide big clues about the direction of monetary policy. S&P down 7, a drop now of 0.2%. The Dow down 152, down 0.4. Nasdaq down 13, a drop there of 0.1%. Nasdaq spent much of the day on the plus side. Indeed, the Nasdaq 100 index eking out a gain of less than 0.1%. 10-year yield now at 1.48%. We've got gold down 0.2%, 18.89 the ounce, and West Texas Intermediate crude down 0.5, 69.72 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got to say, GameStop trading from headline to headline here in the after hours, Charlie, now down about 1/3%. Latest headline saying May total sales rising about 27% from a year earlier. All right, let's get to a story. It is one of the most read on the Bloomberg terminal today. It's about real estate and how the property tax bills going out this month are revealing the carnage wrought by the pandemic on New York City's commercial real estate market. This story by Bloomberg's Noah Buhire, Tom Maloney, and Natalie Wong. Noah is Bloomberg News finance reporter. He is with us on the phone from Seattle. Hey, Noah, good to have you here. So tell us about these property tax bills that are going out. What are we finding?
Yeah. So what we wanted to do here is just take more of a granular look at what's happening with commercial property taxes in New York City. We've known for a couple of months now that property tax revenues were going to go down because of the pandemic. And this is a big deal. I mean, it's an enormous fiscal challenge for the city. Property tax is the biggest source of the city's revenue. And as we all know, hotels and office buildings and a lot of the commercial real estate that underpin that tax, they've really been hurt by the pandemic. And so we wanted to get a look at what that actually meant. And we took the final numbers that the property tax bills that are due on July 1 are based off of, and we stuck it on a map. And, I'd say the overall impression here is just a tremendous amount of change in value. I mean, if you talk with tax attorneys or, budget experts, I mean, a word that they keep referring to is unprecedented. This is a stable source of city revenue, and a lot of these buildings, their value went down, according to the city, and as a result, they'll likely have lower tax bills.
So I want to pin some numbers on it because you guys did some great reporting, and I love numbers. The nerd in me does. New York expects property tax revenue to drop by $1.6 billion, or about 5% in the coming fiscal year, the most significant decline that we've seen since the early 1990s. And as you said and report, a major blow to the city's largest source of revenue. What types of commercial real estate were impacted? Was it all of it?
Yeah, I mean, not every single parcel in the city, but
all types though.
Hotels and office buildings were two areas that we focused on. Those are going to be two critical areas for the city's rebound. I mean, we've been having these debates for months now. When are folks going to return to the office? What's office demand going to be? When is tourism going to return? The answers to those questions are going to be critical to what these properties are worth, and by extension, the revenue the city's able to bring in to pay for social services and all the things that make the city run.
I love the granular level of this data. The St. Regis, which is a luxury property owned by the Qatar Sovereign Wealth Fund, had its taxable value cut by 36%. So too did the Four Seasons. And then you think about the New York Hilton Midtown. We all know it. Huge property here in New York City. It's one of the city's largest. Initially given no tax relief, but did get a reduction of 13% on the final tax roll. But some of those reductions are huge.
Yeah. I mean, just returning to the point that I heard from a lot of folks who track this stuff closely is just these are unprecedented moves. And, with hotels, it's pretty clear. A lot of them, were running in the red last year. So even a 36% reduction, that's on basically no income last year. Offices are a more interesting case study because a lot of them were collecting rent from tenants. The issue there with respect to their valuation is that people don't know what the future demand is going to be. So the prospects there have been hurt. But you had a lot of situations where offices got big reductions in taxable value. And in the near term, that actually may pad their profits. But again, the big question there for a lot of office buildings is what sort of rents are they going to be able to command in the future?
Right. And it's interesting. I mean, if the values go up, I'm assuming these taxes can be reassessed. I mean, I don't know. How quickly does this stuff happen?
Yeah, so it happens annually. And the reason we wanted to look now is because these bills going out right now are the first ones that take into account the pandemic. So, if things rebound, the city's going to assess the property next January, and we'll see bills that, hopefully reflect some better numbers for buildings and by extension, a recovering New York City economy.
No, I just got about 40 seconds left here. You and the team are looking into all aspects of the commercial real estate market, here in the United States, but certainly, of course, in New York, such a major market for office space here. What's your kind of key takeaway about how it's doing? Because I think we all anticipated a lot of fallout as the pandemic was unfolding, but it doesn't feel like it certainly has happened. So just quickly, your thoughts.
Yeah, I think there are different indicators, but the next couple of months are going to be critical. We're going to see what leasing activity is, if all this space that's been put out for sublet, if that gets reabsorbed by the people, by tenants. That'll be a key thing to watch.
All right, we will be doing it and watching your reporting. Noah Buhayar, finance reporter at Bloomberg News, on the phone from Seattle. Check him out on Twitter at nbuhayar. That's N-B as in boy, U-H-A-Y-A-R. All right, folks, coming up on Bloomberg Business Week, we're going to check in with Jamie Metzel. He has teamed up with the folks over at Wisdom Tree. There's a new fund. It's tapping into the biotech revolution. We'll get to that in just a moment right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everyone, there is a new fund in town, a new ETF. It's called the Wisdom Tree Bio Revolution Fund, and we're going to get into the thinking behind it, the logic behind it, and the kind of companies it is targeting. We'll get into that with the Global Head of Research over at Wisdom Tree and a friend of the show, Jamie Metzel, Senior Fellow at the Atlantic Council. We'll get to him in just a moment. First up, though, Charlie, let's get into some of the news after the closing bell. I'm kind of guessing you might talk a little bit about GameStop.
Absolutely. You know, at last update, I told you GameStop was higher. Guess what? In the 15 minutes since that report, GameStop shares now plunging by 7.1% after hours. It is a wild ride for GameStop after the bell. GameStop, of course, the video game retailer that has captivated Wall Street and day traders this year. GameStop says it is tapping a pair of Amazon executives to lead its turnaround effort, betting they can carry out an audacious plan to convert a brick-and-mortar chain into an e-commerce powerhouse. The company also reported better sales than analysts predicted, but right now we do have GME GameStop down by about 5.5%. Turned out to be a day on Wall Street. A lot of that selling coming in the final 30 minutes, final 15 minutes of trading. Stocks closing at or near the worst level of the day. Bonds rallied as investors braced for a key inflation report that could provide clues about the direction of monetary policy. Julian is president of Macro Intelligence 2 Partners. He was our guest earlier today, right here on Bloomberg Business Week.
When I look at tomorrow, I'm looking for a pretty high number. Our work suggests that we could be looking for a number in the very high 5s, possibly as high as 6 for the headline CPI.
Julian Brigden of Macro Intelligence. As for the market backdrop, Emily Rowland is co-chief investment strategist at JH Investments.
We feel like we're sort of sitting at an intersection right now and the traffic lights are malfunctioning. You've got, you know, the 10-year Treasury kind of dropping like a rock here, sort of signaling that this inflationary narrative is stalling. But meanwhile, you know, commodities haven't let up. We've got WTI here, of course, over $70 a barrel. We've got copper prices still sitting at the highs that we reached almost a decade ago.
And right now, 10-year yield 1.48%. Again, S&P down 7, down 0.2. The Dow down 152, down 0.4. NASDAQ down by 0.1%. As for gold, down 0.2%, 1888 the ounce. I'm Charlie Pellet. That's the Bloomberg Business Flash.
Got it, Charlie. Appreciate that update. So, a name familiar to our audience is Jamie Metzel. He's Senior Fellow at the Atlantic Council, former Director on the U.S. National Security Council at the State Department and on the Senate Foreign Relations Committee, founder and chair of the global movement One Shared World. He's also a special strategist for Wisdom Tree, which leveraged data from Jamie in its construction of the Wisdom Tree Biorevolution Index and the Wisdom Tree Biorevolution Fund. It's an ETF targeting companies expected to be impacted by advancements in genetics and biotechnology, and that fund about to be launched. Jamie joins us with more, along with Jeremy Schwartz, who is Global Head of Research over at Wisdom Tree. Both are joining us on the phone in New York City. Jamie, welcome back. Jeremy, nice to have you here on Bloomberg Business Week. So tell us about how you two got together. Jamie, I know this is something that's been on your radar for a long time.
Yeah, well, thanks so much, Carol. Thrilled to be back with you. And you and I, for years, have been talking about these issues. When my book, Hacking Darwin, Genetic Engineering and the Future of Humanity came out, we talked about it. And the big issue is that we humanity are at the earliest stages of a revolution that is already changing the way we do and think about healthcare. But this is like the equivalent of the early days of industrialization or the early days of the internet revolution, where the incredibly powerful tools of the genetics and biotechnology revolutions aren't just going to transform healthcare, but these same capabilities will over time fundamentally transform a lot of other fields, including agriculture, materials, energy, data storage. And so I've always thought that this was just an incredible investment opportunity. And then last year, somebody reached out to me, and it was Jeremy Schwartz. And Jeremy, you want to take the story from here?
Yeah, Jeremy, what was it about it that was so appealing to you guys?
Well, we've been doing a lot of investment around these big trends, what we're calling mega trends and growth opportunities. And I read Jamie's book. Actually, one of my friends had highlighted it as something that he was doing some investing around. I read the book and I was like, wow, these are really big picture trends that's changing our lives. And then I started thinking about how do we identify these companies on an ongoing basis. And I just reached out to Jamie and said, let's start the conversation. Are you interested in collaborating on something like this? We've been working with deep, thoughtful partners in this collaborative form, but you need to really know the space and know the cutting-edge technologies. And I view Jamie as this biology guru who really can help us guide the big picture. What are the important technologies? What are the important companies? And getting some collaboration from Jamie on identifying these technologies and companies has been a really great experience here.
So what's the data specifically behind the index that ultimately led to the ETF? Jamie, what was it, the data that was specifically used? Because I think, when you're talking about things that can impact ag, materials, data storage, I mean, there's a lot there to unpack.
Well, there's a lot there, but what we were looking at is parts of all of these different sectors where these revolutionary tools of the genetics and biotech revolutions were going to empower new business models, new ways of doing things. And one great example of this that's very intimate for many of us are these mRNA vaccines. And so you and I, Carol, have talked about this, the miracle of these mRNA vaccines. They're very different from the polio vaccine, for example, which was a dead or attenuated version of the polio virus. What the mRNA vaccine is, we are basically injecting new instructions to our cells to produce something that otherwise our bodies can't produce, which is the spike protein, and then we have a natural immunological response. But that ability to kind of manipulate, in many ways, the code of life, the mRNA vaccines aren't just about vaccines. This technology is a platform for thinking differently about how we treat all sorts of diseases going future, including lots of cancers and possibly even Alzheimer's. But the mRNA technology also has huge implications for how we think about growing crops and disrupting the way we think about fertilizers. The same is true with tissue engineering and regenerative medicine. There's a translation of all these great technologies from healthcare into thinking differently about how we cultivate food and precision agriculture. And so that we're trying to really capture areas of these technologies where the revolutionary tools are leading to new and disruptive business models.
All right, gentlemen, sit tight for a second. Got to do a little bit of world and national news here on Bloomberg, but we'll come right back and continue the conversation. We're going to get back to Jeremy Schwartz, Global Head of Research over at Wisdom Tree, along with Jamie Metzel, Senior Fellow at the Atlantic Council, former National Security Council official, on the phone in New York City, but talking about this new Wisdom Tree Biorevolution Index and ultimately the Wisdom Tree Biorevolution Fund. All right, you are listening to Bloomberg Business Week. Let's get to that world of national news and to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hi, Nance.
Hey, Carol. President Biden says during his 8-day overseas trip, he wants to reestablish the relationship with our allies. His first stop was meeting with our troops in the United Kingdom.
We're going to make it clear that the United States is back and democracies of the world are standing together to tackle the toughest challenges and the issues that matter most to our future.
Biden will cover 3 countries and meet with leaders of the Group of 7, NATO, and European Union. He'll wrap things up with a conversation with Russian President Vladimir Putin. Millions of dollars are reportedly stashed away in bank accounts held by federal prisoners. Bloomberg's Nathan Hager reports.
It's a banking system run by the Federal Bureau of Prisons, which houses about 129,000 inmates across the country. According to court documents and interviews obtained by the Washington Post, more than 20 inmates have accounts holding more than $100,000 each for a total of more than $3 million, shielded from court orders like child support, alimony, and other debts. One source says the combined value of all federal inmate accounts recently topped $100 million. Critics say the system is rife for corruption. Bureau of Prisons leaders say they are diligent in making sure inmates pay their debts. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden is revoking bans on the Chinese-owned apps TikTok and WeChat that were put in place by the Trump administration. Senior administration officials say they plan to review software applications from foreign adversaries to make sure they do not pose a risk to American Those that do will be banned. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thanks very much, Nancy Lyons there. Just want to mention some headlines crossing the Bloomberg. Manitowoc, it's the construction and mining machinery company. It says that cybersecurity has led to a systems outage and that they are diligently working to restore its systems. So again, also the federal law enforcement has been notified. So a cybersecurity incident on its network, that matter has caused and may continue to cause a delay or disruption. The stock, a little bit of movement here in the after hours. It is down about 1.8%. So we'll continue to monitor that one. In the meantime, joining me right now, Charlie Pellet of Bloomberg News. Charlie, we singled out this story because we thought you're a big traveler. You're not a big guy. I don't mean it like that. You're tall. And I think we talked about this a little bit about, right, how they were going to recalculate the weight of passengers because they kind of need to know that when it comes to, weights on planes.
Exactly. It's very important. You got to know what you're flying. You got to know how it's all tied down in the back of the plane. You got to know how many passengers you got to know on board, how many passengers you have on board. And now you got to know their weights. So all of this effective by June 12th, at least. That's when the airlines have to come up with a plan. And this is according to Dow Jones reporter Scott McCartney. Airline officials say the weight estimates used for passengers and baggage going up between 5 and 10%. That could require some flights. Now, I'm a guy that likes to get bumped. Yes, there are people out there who volunteer for these things.
You love to get bumped.
I certainly do, because a couple of things. Number one, may get some miles, may get a free ticket out of the deal. On the other hand, might get rerouted with a plane that has a stop. That way you get more takeoffs and land. It's an aviation thing. But here's the deal. One of the things you've got to take into account, too, is the weight of your fuel and also what the temperature is doing. Hence, weight plays a key factor in all of this, especially when you're flying from in and out of some of the higher elevations.
Yeah, if you've ever been one of those small planes, like between the islands or in the Caribbean or something, you know that they're like, okay, you sit there, baggage there, and they make you move until the weight is balanced. These are important things. Basically, though, it's saying, I guess we're all getting heavier, is what it's saying,
That's
though.
my takeaway, too.
Yeah, all right. Good stuff, Charlie. Thank you so much. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
GME GameStop giving much excitement after hours. GME GameStop now down by 8.4%. A couple of minutes ago had been down as much as 10.5% after earnings. GameStop tapping a pair of Amazon executives to lead its turnaround effort, betting they can carry out an audacious plan to convert a brick-and-mortar chain into an e-commerce powerhouse. But right now, we've got shares of GameStop down by 9.1%. Turned out to be a down day on Wall Street. In fact, stocks closed at or near session lows today. Bonds held on to gains ahead of the CPI report tomorrow morning. That number, by the way, breaks at 8:30 a.m. Wall Street time. Complete coverage right here on Bloomberg Radio and, of course, on Bloomberg Television. S&P down 7, ending the Wednesday session at 42.19, a drop of 0.2%. The Dow down 152, down 0.4. Nasdaq down 13, a drop of 0.1%. 10-year yield 1.49%, 10-year up 12.30 seconds. Gold down 0.2%, 18.88 the ounce, and West Texas Intermediate crude down 0.4, 69.76 a barrel. One more check of GameStop down now by 8.8%. I'm Charlie Pelham. That is a Bloomberg Business Flash.
All right, Charlie. Thank you so much. I want to get back to our two guests. It is Jamie Metzl, Senior Fellow at Atlantic Council, former Director on the U.S. National Council at the State Department on the Senate Foreign Relations Committee. He's also Special Strategist for Wisdom Tree. He is still with us, along with Jeremy Schwartz, Global Head of Research at Wisdom Tree, and talking about the launch of their new Wisdom Tree Biorevolution Fund, an ETF, which actually launched Thursday, so forgive me because I think I misspoke before. Both of them still with us on the phone in New York City. So let me ask you, Jeremy, talk to me about the interest in the fund so far.
You know, these type of funds, they're easy to understand, and then you get news stories like the Biogen announcement on the new Alzheimer's drug treatment up 40%. Biogen is actually at the top holding in WDNA today, which is it's the largest. And we're seeing good early conversations. One of the first clients I talked to said they don't like very niche funds. A lot of funds focus just on healthcare or the genomics theme, but what we are unique at is providing exposure to more than just the human health elements of things from, as Jamie talked about, the transition in energy and in agriculture and food and the new developments that biology is going to impact all these other sectors. So I have high expectations. I think this is going to be a great story and a fund that gets a lot of interest.
Yeah, exactly. It does sound like a basket that's going to expose you to a lot of different things. I mean, Jamie, as you mentioned, it's ag, it's manufacturing. It's not necessarily, I think you hear biotech and you think medicine, science, that's part of it, but that's just a component.
That's exactly right. The way I say is that healthcare is the first station on this journey, and part of that is because human health is so important to us, and part of that is because we're investing such a large percentage of our total GDP in healthcare. But these same underlying technologies, as I was saying